Good morning, ladies and gentlemen. It's Paul Wallace here, and here we are on Tuesday, 14th of May 2019, for the real-time daily trading ideas session. Apologies for those of you who joined us for the live session this morning. We had a little bit of a tech foul up there. We were in the lap of the tech gods this morning. We had a challenge. But, these things happen with technology. As always, we find a way, we adapt, we overcome, we find a way. And so here we are with a recording of the real-time daily trading ideas session for today. As always, we'll just start with a quick risk disclaimer that trading with financial instruments offered by Admiral Markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Before entering into a client agreement or making a transaction, please make sure to read the terms and conditions of our service. Consult a specialist if necessary to ensure you understand the risks involved in trading. This presentation and accompanying videos for information and educational purposes only. Online education materials are developed by Admiral Markets and distributed by Admiral Markets Group investment firms for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. As always, some of you may remember that as of August 2018, the regulation within the European Union differs for retail clients and professional clients. In our presentation, we use demo trading accounts where clients could still use a high leverage and a risk-free environment for opening a live trading account. Please consider the differences between retail and professional trading terms. As always, we'd love you to trade with Admiral Markets, and as you can see there, for both DAX30 and Euro Dollar, we offer very competitive spreads during open market hours, and those spreads are getting better all the time. And we also offer the MetaTrader platform in both MT4 and MT5 versions with our own Admiral Markets Supreme Edition. And Admiral Markets is a global brokerage with entities across the world. And if you contact your account representative, they'll be very happy to guide you in utilizing the best entity for your own trading requirements. I said my name is Paul Wallace. I'm one of the 5 traders, five real-time daily trading ideas slots. This is for Tuesday, 14th of May. Tomorrow will be Giancarlo, and as you can see there, every day, 10 o'clock London time, we have the real-time daily trading ideas sessions. And if you'll bear with me a moment, what we'll do now is we'll switch across to the charts, and I'll chat you through what we're going to look at for the next few moments. As always, you can contact your account representative on the London number there, 02035140756, email at hello@admiralmarkets.com, or you will find this session and many other sessions on our youtube.com/Admiral Markets or on the facebook.com/Admiral Markets global page. So, ladies and gentlemen, let us have a look at what's been going on in the markets. I'm just going to switch across to the indices session. Today, we've had the 10 o'clock, we had the German ZEW survey, sort of business confidence results for both Germany and the Eurozone. And tomorrow early doors, we've got Germany GDP, and at 10 o'clock, we'll have Eurozone GDP, which we'll all be keeping a keen eye on. And tomorrow afternoon, we've got at half one, we've got Canadian CPI, and we have 130 US retail sales, which people are keeping interest on because it's forecast at 0.2, down from 1.6 last month. So it's a relatively light week in terms of formal news, but as always, we've got plenty of things going on. And I suppose the interesting thing to begin with really is to talk about the sort of developing spat between the US and China over their trade talks. What we saw, or what we were expecting, is actually to see some positive news regarding the trade talks between both China and the US. But actually, it's fair to say over the last 7 to 10 days, the wheels have come off that quite rapidly, and that has had a rather compelling impact upon financial markets. Why don't we have a start by having a little just look at the sort of China A50 index. So we're just going to go up to, I'm going to start with the weekly chart here. There's plenty there for us to be looking at. It's a weekly chart. Those of you just new to trading, that the charts are pretty simple setup. We've got green bullish, red bearish candles. We have a blue 20 period moving average, a red 50 period moving average, and a green 200 period moving average. um, draw in levels of support and resistance and any particular sort of patterns or trend lines that are relevance to us. If you want to know more about how those charts are set up, you can go and have a look at the Mastering the 4Ms of Trading webinars, which are in the YouTube archive for Admiral Markets. But we can see here, this is the weekly chart, and you can see that for yourself, that this year, we just had a great run there. We had an absolutely super run there. Everyone's sort of expecting great news coming out of those US-China trade talks, and then suddenly we have this big bearish engulfing candle here. And if we go down to the daily chart on it, we can see that particular day there. Okay, we had that rather sort of a sudden juddering halt. Okay, I would call that. Really big engulfing candle, big key reversal candle, and that's what we're particularly looking at. And you can see there, actually, price fell away. Okay, it tried to rally up, but the sort of power of the 20-period moving average, setup that we talk about in the Mastering the 4Ms of Trading webinar, sort of prevented it from going higher, and we can see that we have just fallen down there. Okay, so we've collapsed from about 14,300 down to 12,300. Okay, so we've lost about 2,000 points in the Chinese index. Okay, over the last couple of weeks. You can see that for yourself. Now, of course, that also has a knock-on impact across the globe, where Mr. Trump sort of had a little bit of a moment there, and effectively he raised tariffs from US goods from, I think it was just last Friday gone, from 10% to 25%, so just on about $200 billion worth of imports from China. Not surprisingly, people see that as perhaps the first salvo of a darkening trade war, and that makes traders and investors jittery. So we actually have a look at, well, how does that impact, and how's that been playing out on the sort of the other indexes? And it's pretty clear to see that it's made markets very, very nervous. I have an indices profile here, okay, that gives me a very quick snapshot of what's been going on. They're all on the daily chart. And what I've got here on the top left is the Dow Jones 30, the S&P 500, the Nasdaq 100. The ASX, the Australian index here, the bottom left here, okay, the Nikkei Japanese 225 on the Admiral Markets MetaTrader platform, sort of a China A50 here, the DAX30, and the FTSE 100 here. And you can see pretty much, all for yourself that actually what we've seen is some, real roll off the tops there over the last couple of weeks, and some real moves down. And we talked about some of those trades the last week or two, okay? We talked about, there we go, on the Dow Jones. We talked about how we'd had a key reversal here, okay, to start of May, a big key reversal day. We had a little bit of a pullback, and then we just fell away. And I talked about some of the trades I'd had that over the last week. We were back down to this kind of 200-period moving average, right? That's what we're looking at, and I personally look at this as kind of the Dow is sort of leading the way at the moment. And yes, we're having a bit of a response around the daily 200. That's not a surprise. And I'll be watching to see, whether that can act as a level of dynamic support this week. Okay, will it be able to hold on? I'd like to see maybe a little bounce up from it, or if it starts to slice away and fall away, well, that gives us a bit of an indication of, let's say, a further darkening of the mood of those US indexes. And you can see that it's the same pattern really with the S&P 500, okay, and with Nasdaq. Okay, the Dow's already hit its 200. You can see I'd like to see maybe the S&P kind of fall down to there, to its 200 as well. You're going to see pretty much the similar on the Nasdaq as well. They're pretty much replicating each other, and we can see that across the other indices as well. Okay, and if we have a quick look at DAX here, whilst we're here at the moment, we can see that there's kind of, it's had exactly the same move. We're at the daily 50 here at the moment. Okay, in the same way, look and see how the Dow Jones reacts to the 200-period moving average. I'll be looking to see how the effect of the DAX really responds to its daily 50 period. If you remember last week, okay, we had a short trade here on the last week, okay, and if I just find it on the chart here. Last week, okay, last Tuesday, we were looking at effectively a trade of the break, and we fell away. But actually, you can see it's continued considerably down here. And what I'm looking at the moment is, whilst I'd be on a kind of a medium-term basis, I would be bearish. What I'd be interested to see here is, for as a trade idea, okay, is looking at, can price come down, fall back down towards the sort of this area here, congestion area here, around about 11,880, all right, and looking at, will the 20-period moving average on the 1 hour hold as a sort of form of support? If I see bullish sort of rejection candles there, okay, I'd be looking to see as if we could get a move back up to around about that kind of a 11,990 level there, okay, back up towards there, back up towards the sort of 12,000 number. You see, it's acted as we've been there before, so I'll just be watching that, okay, over the next hour or two to see if that provides us with an opportunity. But most definitely, on the kind of the sort of the sort of we look at it on the 4-hour chart. We're looking at, can it actually sort of rally its way back up towards that sort of 4-hour to 200 period moving average, which, as I say, is around about that 12,000 area. And then, for a swing trade, then we'd be looking at, well, how does price react when it gets back up to this area around about 12,000? That will be the sort of, I'll be looking at that, how that plays out over the next 24 hours or so, because that might be what provides me a sort of a swing trade to the short side, back down towards those lows of around 11,840. And that's what I'm going to be sort of setting up to watch for the next 24 hours. So, we've had a little bit of a look at some of the indices there. Let's have a look at some of the currencies, okay? And in particular, how this has a knock-on effect, okay? We've seen the rollovers in the indexes, okay? And if you've been trading for a while, you know that markets, capital is a coward. It will run and hide in the safest places at the first sign of trouble. And what we see in that, in terms of the FX markets, is, well, that invariably, very often the Japanese yen is seen as a safe haven when there is, let's say, there's trouble on the horizon. And interestingly, if we go to the Japanese yen pair, Japanese yen, okay, I talk about in FX markets how I'm always looking to buy strength and sell weakness. That's what I'm looking to do. Okay, that's what I want to try and do. So what we've seen here, and once again, we have a profile here for the Japanese yen. You can see that there. I talk about setting up these profiles on one of the Mastering the 4 M's of Trading webinars, which is in the YouTube and Facebook archives. You can see here, I've got the yen against the dollar up here to the top left, against the euro, against the pound, and against the Aussie. Also against the Canadian yen, the Swiss yen, the Kiwi yen, and also the Nikkei here there itself. What we see here is that, hopefully you can see that, that all of these charts have actually effectively been, sort of collapsing quite nicely over the last couple of weeks, all of which is implying that the yen has been getting stronger. So as we've seen those kind of trade spats being carried out, we can see that clearly the yen has strengthened. And as I said, I'm always looking to, trade around strength and weakness. And what we've had is Japanese yen strength, Japanese and the US dollar, sort of top of the pile at the moment. Then at the bottom of the pile, we've had Australian dollar. Okay, Australian dollar had a bit of a rally. Okay, up until a few weeks ago. But invariably, the sort of the fortunes of Australia are linked very, very closely with China. So invariably, when we see rumblings about the sort of what's going on in China, rumblings about the Chinese trade war, that has a knock-on impact on Aussie. Okay, so what we've had is we've had effectively a case of weak Aussie, strong yen. And if I look at the charts here, this is the daily chart. Well, you can see that it's actually just a beautiful representation of that. Okay, we had a real reaction there at the daily 200, okay, and price has for the last few weeks just been one-way traffic. We're back down to around about 76 here, which we'll look at again in a moment. But actually, you can see that has just been one-way traffic. That's what we've been looking at. The 4-hour chart in particular has provided us a couple of really nice trades just in terms of being able to trade pullbacks into the trends. And I'm interested now to sort of see what's going on here. Okay, we've had a little bit of a bounce off around about that 76 level. If I go down to the, if I'm kind of curious, can we sort of pull back up to around about this kind of 76.30, 76.50 area? If you're let's say a conservative trader trading maybe swings on the 4-hour chart, what I'd like to see is maybe a move up to around about, as I say, about 76.30, 76.50 area here. Let's just draw in a little shape here just to sort of give it a little bit of an idea. We can see that there's been, there's been reactions here in the past. I just want to see if price will actually sort of move up there and then look at rejoining this trend. Okay, back down towards the 76, back down towards those lows at 75, 75. Okay, so that's what I'm just looking at as a conservative swing trader. If you're an aggressive intraday trader, well, what we had here, okay, is price has put a little bit of a double bottom. It's pulled up back up. It's getting up towards that area. but then actually we had a rather sort of bearish rejection candle there. And if you're an aggressive intraday trader, then a trade idea for you is to be short at around about 76.25 with a stop at 76.38. So you have about 13 ticks of 13 pips rather of trade risk, and looking back down to sort of target back down towards around about 75.86. So basically what that means is you're risking 13 pips for approximately 39 pips of profit. That will give you about 3 reward to risk. That's the kind of that's a good setup, and I'll take those trades all day, every day. And once again, that would allow you to be rejoining the bigger picture, which is effectively that we're selling Aussie weakness and buying Japanese yen strength. So that's an idea to look at. There's a trade idea for you to take away. What you can also look at is, if you just look at any of those yen pairs, you'll see that it's a pretty similar story across the board. So I'm just going to finish off briefly here, but it would be very remiss of me to sort of finish up without having a little look at. Let's have a look at Bitcoin, ladies and gentlemen. Okay, it's been a little bit of a sort of an unpopular child over the last year or so. You all know why, okay? Because invariably we had this huge drop away, okay, and you heard me talk about this last year, okay, about break of 6,000, drop down to around about 3,100, 3,000. What we saw was first saw the break of this trend line, okay, and then a couple of weeks ago we got this big shove, right? You can see it there, the shift, okay, the shift. We had a real big bullish candle there. We got above 5,000, we've held above, and then we got above the 50 period moving average, okay, and then I was saying start to get interested when we can get above and hold above 6,000, and you can see there, ladies and gentlemen, back up above 8,000 there. So in the space of what is effectively about 6 months, we've gone from about 3,100 to 8,100. We've put in about $5,000 on Bitcoin. I think it's fair to say that there's a good deal of volatility coming in, and we can see this here. Okay, you can see that there. If I go down to the daily chart, as we were saying, we're above 5,000. 5,000 has really acted as a significant level of support there. You can see it. We got up to 6,000 where we just sliced through it and gone all on that way. This is my view. This is my personal view. I think personally this is linked into some of the indications we've had out of China and the US. Invariably, what we also saw is, as Mr. Trump brought on his tariffs, we also saw the Chinese take a greater interest in foreign currency withdrawals, and in particular, they lowered the withdrawal amount that people in China could take out in US dollars from their banks. It's a form of capital controls being placed upon the people. My view is that people are now using back Bitcoin to effectively get around those capital controls in China. So invariably, what we're seeing is a huge lump into Bitcoin. A huge lump. That's not a technical term. It's just a case of what we're seeing is increased volatility and increased interest in Bitcoin. So we can see that is rallying away. Is it going to be like the sort of mania we saw over about 18 months ago? I'm not entirely sure about that. But what I will be doing is looking at an opportunity to sort of see if that trend continues to have legs. Well, then if we get pullbacks, that might be an interesting point to sort of re-engage with Bitcoin and take some positions there. But as you can see yourself, it's starting to go a bit parabolic there, okay. And as we've known in the past with any instrument, once things sort of shoot up, they tend to sort of fall away just as rapidly. So just keep an eye on that. Okay, there will be opportunities for us. It's woken up, it's alive, but we need to be able to sort of just have a little bit of patience and wait for the right opportunities. So there you go, ladies and gentlemen. As always, we wish you the very best of success in your own trading. There'll be another around the real-time daily trading ideas session tomorrow with Giancarlo. We apologise for the little bit of the tech issues there this morning. Wish you the best of success in your own trading, and I look forward to speaking to you soon. Many thanks.